All right. You got me. You got me. Hey, everyone. It's Mitch Goldberg. Welcome to Be the Boss of Your Money. It's my live stream. It's the post-market show where we talk about the goings on in the stock market, the world of finance, the economy, business, personal finance. It's all about making you the boss of your money. Man, oh man, I get so pumped up to do these shows. Don't you get excited? I just get that excited feeling to do these shows. So what's going on today? The Federal Reserve met. They had their September meeting, a 2-day meeting, started yesterday, ended today. It's all about the earth-shattering potential of what can happen when the Federal Reserve pulls back on the stimulus that it's been providing to the economy to help us get through the COVID pandemic. And today, the Fed has come out. They said, by the end of next year, middle of next year, we should be through the taper. And you know what happened? We lived another day. No big deal, right? We lived another day. And very exciting. I have to show you what I posted on LinkedIn yesterday about this. Anyway, let's do all a quick introduction. We'll get into all this good stuff. And here we go. Welcome back. It's Mitch Goldberg. If you're just joining me now, we're talking about the Fed, the Fed's announcement, what it changes in the world. Did it do anything to mortgage rates, credit card rates, auto loans, leases? Nothing changed. So why even bother? Well, we need to talk about what happened with the Fed, what the Fed said, what the taper and all that. I'm going to tell you what the taper is. There was no taper tantrum. The Fed basically, in my view, has done a great job getting us ready for the taper by beating us over the head mercilessly until we get so bored about hearing about the Fed's taper that we can't wait to get it over with because it'll be like a sense of relief. We'll talk about that in a second. I want to show you what I posted yesterday on LinkedIn. Are you a linky? I'm definitely a linky. And where is, I got to show you this. I posted this yesterday. And you're familiar with the song Don't Fear the Reaper by Blue Oyster Cult? Well, if and when it comes up, I'll be really happy because it just looks like, my internet service seems like it's slow when I'm streaming, even though I got a new computer and super high-speed internet access. So let's talk about today. The Fed did its thing, and it came and went. All right. By the way, the chief technology officer of Facebook just stepped down. You see all the stuff going on over there at Facebook. So let's take a look at the U.S. markets. Let's go through a couple of quick things. Okay, let me make this a little bigger so you could see what I'm seeing. Okay. All right. The Dow was up 338 points, up 1%. It was up in the 400s before. So I would say very mildly disappointing that it didn't close higher. But on the other hand, I'm glad it didn't run up too much because when you have these giant run-ups after a down day or a down week, they often get repealed. And I want the Dow and the S&P and the NASDAQ, I want them to recover, but I want them to recover, slowly. I want them to go nice and slow. I want a durable, solid advance in the major averages, not an ephemeral pop-up that becomes a pop-down the next day, okay? I want a solid advance that I could hang my hat on. This is the international sign language for hanging my hat on, right? NASDAQ was up a little over 1%, up 150. I know you're thinking, wow, NASDAQ's up 150 points. Holy cow. But keep in mind, it's almost 15,000. The NASDAQ is just not that little low number index that it used to be. I think when people look at the NASDAQ and see, 14,896, there are probably some people out there who think they're looking at the Dow. Oh, the Dow was about 15,000 without realizing the Dow was recently at 35,000 plus. Okay. S&P was up almost 1%, up 41 points. Gold off again. I mean, we talk about inflation, people worried about inflation. Gold just never catches a bid. It's consistently around $1,800. Sometimes a little more, sometimes a little less, down today to 1767. Just, nobody cares. Oil was up $1.48. I've been telling you this. I don't want to come off like all arrogant and everything. I've been telling you. No. If the Evergrande Chinese real estate conglomerate was a problem, and that was about to throw the world into this financial tailspin, and we were ready to hit the skids into another recession, or the Fed's moves were going to take out so much liquidity out of the economy. If it was all a problem, you would see oil lower. Okay, but oil continues to hold up well as an economic indicator. The price of oil, and it's still affected by Hurricane Ida, but we all know that the Hurricane Ida supply disruptions, which were not huge, are going to come back online pretty quickly. That's one thing you could count on. Oil disruptions get cleared up pretty quickly. So oil is holding up pretty well, and I think that's it just symbolizes to me that the global economy, especially the American economy, continues to lift off. It was slowed down by the Delta variant, and it's slowed down by supply disruptions, including materials and labor disruptions, labor shortage. But we're getting there, okay? By the way, you know how you fix labor shortages? You fix it with technology, robots, artificial intelligence, efficiencies. I think that's one reason why the tech sector has been so good, because everybody is saying, well, if I can't find workers, then I'll have to figure out a way to live with fewer workers. I'm not saying it's good, but you'll have more people working in technology, right? Maybe you'll have less people working at McDonald's, but more people working in the technology field, right? You go to McDonald's now, you put your order in a kiosk, you swipe your card, or use Apple Pay or an app, McDonald's app, and you pay. You get your order and you leave, right? Or you eat in, whatever you want to do. I think most of us are taking out our McDonald's now. But that's besides the point. The VIX back down to 20. You see that? It's 20 over here. So I have the green cursor now. I made my cursor a little bigger and it's green so you could see it. VIX, I said if the VIX goes over 20, we're going down to the market. It happened. And I'm telling you, if the VIX could get below 20, here comes the rebound. Here comes the rebound. Let's look at Russell 2000 small cap stocks. The biggest gainer of the day, up 1.5%, 32 points in the Russell 2000. Well, the Russell 2000 was the sector that got hit the hardest. So here it comes, and it's coming back. Okay. While you're watching this, if you have any questions, hit me up in the comments. I'm going to check those out in a moment. Words of wisdom, words of encouragement. They're always appreciated. Let me know where you're watching from. Are you watching in your office right now? Are you just listening? Well, if you're just listening, you're not going to comment because it's written, right? It's like if you're listening to me in the car, don't comment because you're driving. But if you're watching me like from home, from your kitchen, if you're my friend Jack and you're smoking a nice stogie outside with a little scotch, sounds pretty good. Let me know. If you're in your office, let me know. And who is out there? Got the heart from my wife, Judy. Thank you, sweetie. And who is out there? We got Filippo in the house. Bought the dip yesterday and took profit today. Easy money. Easy money. It sounds like Eddie Money, the singer. Okay, awesome. Good for you, buddy. And you got precious metals, so really undervalued. Always buy physical. I'm kind of surprised, that you're into the physical metals for such a crypto guy. I know you are very worldly and you have you can believe in more than one concept at a time. So I get you. What else? Where maybe they could pay at McDonald's in Meow Coin. Meow Coin. Nice. Good one. Yeah. You know, the problem is when you pay for something in crypto is when you buy something with crypto, let's say you buy $100 of something with crypto, that's the equivalent of selling $100 worth of crypto, and it's a taxable event. So every time any of you use crypto to buy something, it's like the equivalent of selling crypto, right? It's like the equivalent of selling your crypto. So you buy a Tesla for $90,000, and you're using $90,000 worth of, crypto. Well, now you've got a sale of $90,000 worth of crypto, and you might have to pay capital gains taxes on it, right? So it's a little wrinkle there. Plus, in the Democratic budget, the Democrats' budget that they're putting forth, they plan on creating a wash sale rule for crypto. So let's say you buy Bitcoin for $10,000, it's $9,000. I'll just sell it right now, and I'll buy it back right away. I'll take $1,000 loss, and I'll still have my $9,000 worth of crypto, and I'll have that loss to you either right off at the end of the year or right off against gains, however you decide to do it. By the way, I'm not your CPA. I'm not your tax advisor. You have to consult with your own tax advisor. I don't give tax advice, just have to say that. So I'm not your tax advisor. I'm not your legal advisor. I am not your crypto advisor. I am not your marijuana advisor. I am not your mama. I am not your papa. I'm just your friendly neighborhood financial advisor. All right. Yes. So, but regarding physical need to diversify, absolutely, you are a smart fella. Filippo, you are a pretty fart smeller. Peter's out there. Hey, Mitch, good to see you. Good to see you too, Peter. I will be heading to our networking group's meeting on Friday. It's supposed to be outdoors in a pavilion in a park in Rockville Center, so I plan on being there. What's up, Jerry, the G-Man? Hey, Jerry, what's up? All right, good to see you, Jerry. Thank you for joining me. Let's go back to the screen. All right. I don't know what the heck I want to show you there, but oh yeah, here we go. Oh, that's not the screen. That's not the screen. I feel like we're stuck on camera 4. Okay. You see that? We're stuck there. Go back to screen. Oh, you suck. Okay. That's technology for you. I was going to show you the Fed's dot plot, but I'm going to just tell you about it. Half of the 18 members of the FOMC, they make something called the dot plot. It's like the silly dot plot. Ben Bernanke is the one who I think he's the Fed chairperson who came out with the dot plot. Basically, the dot plot is, each Federal Reserve Bank president puts a dot on a chart of where they think interest rates are going to be in 2022, 2023, 2024. This is like never accurate. There's like no value in looking at the dot plot. It has been wrong constantly, but I think if you look at it in the way the dot plot's intended, it was to give the Fed presidents an open forum to speak or to communicate their view, their overall very non-specific general view of where interest rates that the Fed controls, the federal funds rate, where they could be over the next year, 2 and 3 years. And it's anonymous. Like you look at the dots of the dot plot, see if I could pull this up. Now, there it is. Okay, we're in business. We're in business. Oh, yeah. Let's see if I can make this a little bigger. All right, so this is the dot plot, okay? And this is where they are for 2022. Okay, so about half the Fed governors, Federal Reserve bank branch presidents, a freaking tongue twister, see rates, and then some of them see rates as high as 1.5%. in 2023. So we thought we weren't getting any interest rates till maybe end of 2023, but now it's looking like we could get interest rates in 2022, interest rate hikes. Okay, so let me just put this whole shebang. I effing hate when I touch the when I hit the wire on my XL mic. I don't know why, I just hate it. Do you hate that? If you have an XL mic, let me know if you hate when you do that, but it drives me absolutely crazy. All right, so let me explain the taper. This is the big news. Just to stay with me, I'm going to explain everything, okay? The Federal Reserve, which has tamped interest rates, short-term interest rates down to near zero, has decided to buy Treasury securities and mortgage bonds for two reasons. First is they buy them and that money goes to the banking sector to make sure banks are, more than adequately flush with cash. So it's good for the banks in a calamitous time. It encourages lending and it keeps interest rates low because you're buying mortgage bonds and that lowers interest rates and mortgages. So it's good for borrowers. It's good for the credit market. It's good for home buying. Okay. Keeps rates low. The Fed has been buying $120 billion worth of bonds, $80 billion a month of treasuries, $40 billion for mortgage bonds, starting January of this year. And a lot of people feel like, why are you putting over $1 trillion, printing over $1 trillion? So it is, it's money printing. Legitimately, it's I'm not like exaggerating using puffery. It's money printing. Why, if the economy is improved? Now I know we've taken a step backward with the Delta variant, so we kind of went 2 steps forward coming out of the pandemic, 1 step backward. And for those of you about to say we're still in the pandemic, I realize that I'm talking about more like the pandemic economy. Okay. Most eligible people who could get the vaccine, the COVID jab, have gotten it. I know it's really tough to see so many people not do well, and there's still so many people who are unvaccinated who are getting Delta. It's extremely contagious. Well, imagine if you flip to maybe 20% of the country was vaccinated and 80% of the country wasn't, of all eligible people. I mean, that would be a serious problem. Okay. So the Fed's buying these bonds, and the taper means they're going to lower the amount of bonds they buy every month. Now, if the Fed just went from $120 billion to $110 billion and $100 billion of buying every month, they're still providing stimulus. They're just providing less of it. But that's called the taper, so it's less stimulus, not more. And I think everybody agrees that with all of the fiscal stimulus, the CARES Act, the child tax credits that went out, all of the money that's been thrown at the economy, we have yet to finalize the infrastructure bill and the $3.5 trillion Biden deficit or budget, whatever you want to call it. Okay. Budget buster, you could call it, whatever you want to call it. Okay. I'm whatever you want, but we haven't gotten those yet. But it's basically generally agreed upon that we are past maximum stimulus from both Congress, government spending, and monetary stimulus from the Federal Reserve. So when the Federal Reserve does stimulus, it's monetary. When the government does stimulus, it's fiscal. They're both stimulus. And as the Fed pulls back, people are worried that what if the economy can't function on its own? Okay. I think that's really the big worry. Okay. Let's see if I could pull that thing I wanted to show you guys from yesterday. Don't go away. Here it is. I made this graphic, and I think I'm so freaking clever that I did it. Any Blue Oyster Cult fans out there? It's instead of "Don't fear the Reaper," I crossed off the Reaper with red lines, the red X, and I put in taper in a Gothic style font, and I wrote "Don't fear the taper. And what I wrote yesterday is that the Federal Reserve, let me see if I could, I'm going to read this I'm going to read this to you guys, okay? So let me see how I could take a look at this. Okay. The Federal Reserve wraps up their September meeting tomorrow, which is today. A lengthy statement from Chairman Jerome Powell to talk about this. In the U.S., is the U.S. economy ready to stand on its own 2 feet? A lot of investors have been saying it is time for the Fed to pull back in monetary stimulus. They've been screaming it's creating too much inflation. It's destroying the dollar as the world's reserve currency. And my message, don't fear the taper. Instead of don't fear the reaper, don't fear the taper. I don't know if you were able to see that, but anyway. So that's what that was. Okay. So the Federal Reserve has prepped us for this. They basically, Jerome Powell said that we could be finished with the taper by mid next year. So it's going to be a 7 or 8 month ordeal to get out of the taper. He also said he's going to be extremely flexible. If he has to stop tapering or slow down the tapering, he will, as the data dictates. But right now he sees employment coming back, and he's very concerned about not just having stronger employment, but he's very concerned about employment for minorities. In particular, he mentioned African Americans and Hispanics. He said those 2 groups have not recovered their jobs, their low unemployment figures from 2019 yet. So he wants to keep pushing, but he also knows that he's pushing inflation, and he could create a bigger problem down the road. So it's a very fine line that he walks. He wants to taper. What you expect to follow the tapering is this: raising interest rates. Now, that's what kills bull markets, is often raising interest rates. When the Fed takes the punch bowl away, as they say, the Fed raises rates. So he has literally strained himself, like talking like this. Oh my God, I'm straining, like really strain himself to let us know that interest rate hikes are not a foregone conclusion after tapering. He says they both have their own set of data, and he said that he is using a much more stringent set of data points to raise rates, and it'll be a lot harder to convince him to raise rates as opposed to pulling back on the bond buying program of $120 billion a month. So he said everything that investors wanted to hear. Monday's sell-off 2 days ago was, in reality, to me, it was just people who last minute decided they needed to lighten up a little bit on stocks before we got into this meeting. That's what that was. Don't read more into it. Don't read too much into it. Really, that's what that was. It wasn't the Evergrande Chinese real estate debacle. It was not that. I think that's a non-event for American investors. What it was is just, well, we're getting closer to the tapering. We're real brave in saying we could take it. But when you're about to get into that fight, maybe you're not as brave as you thought. Let's take a few chips off the table. And then we get the announcements out of the way. He said we're going to talk about tapering. We'll probably announce it. November 2nd or November 3rd is their next meeting, the next meeting of the Federal Reserve. They meet every 6 weeks. And at that point, they'll give you, it's expected that they'll tell us when exactly they will start the tapering and by how much. It's anybody's guess, but people are looking for roughly reduction of $10 billion a month in treasuries and $5 billion a month in mortgage backs. That'll take about 8 months for the Fed to run through its complete tapering. Interest rates will still be near zero in short-term rates. And then Powell said, we're using a whole different set of indicators and stats to see what we're going to do with interest rates. That was music to the market's ears. We are back to the races. In spite of Disney getting crushed yesterday, FedEx getting crushed today, and Facebook getting crushed today, we still had a really good day in the market. So individual stock stories, I hate when the screen blinks, but individual stock stories still count. But keep in mind, folks, we're barely 3 or 4% off all-time highs. And I said this before, I'll say it again. I don't think pullbacks are going to be deep, because I think the chairman of the Federal Reserve, and the FOMC will continue to be very accommodative. Okay, Philly was out there with something. I have a question, Mitch. The government keeps printing money. Is there no limit to this? When will we get the deficit under control? Dollar has been in a bear market for so long. At one point, do we as Americans say enough is enough? Higher taxes every year and inflation up, but spending is never under control. Thoughts? Okay, well, this has been going on a lot. In the previous administration, spending went up dramatically. It continues to go up now. But every administration, right, since 2000, spending has gone up. The economy has gone up as well, though. The economy has grown. So keep that in mind. Can it go on forever? It can go on for a very long time. I don't like to use never, always, forever. Okay. But you will forever be my buddy. Okay. Okay. You will forever be my buddy. But it's MMT, modern monetary theory is what's been taking place for this whole time. And it's part of it is viewed as we have something to back the money. Okay. This is not like Zimbabwe or the Weimar Republic. The other thing is that interest rates are incredibly low. So it's not so much the size of the deficit, it's the cost of the deficit. Now if treasury yields on the 10-year treasury were 8%, we wouldn't be able to get away with this. It would cost too much money to do all of this borrowing. But interest rates are still low. And the fact is, as long as interest rates are low, it doesn't seem like anybody has a problem with us borrowing all this money. Because if there was a problem with borrowing all this money, interest rates would be a lot higher. And we're seems like we're a long way from there. So how long does it go on? I don't know. But the hope has always been we spend a lot of money and it creates even more revenue. One day, maybe it'll happen. So I don't know how long it goes. I wish I had a better answer for you, but it certainly could go on a lot longer. And I wouldn't use a debt ceiling as a political weapon. We have to raise the debt ceiling and then worry about how we're going to get spending under control. But like I said at the top of the show, anyone in the market agrees right now that we are way closer to the end. We are way closer to the end of all of this stimulus and government spending and bond buying than the beginning. The scary thing is, what if we need to do this again? What if we need another quantitative easing from the Fed or another multi-trillion-dollar deficit spending package from Congress? That's the scary thought. So now that we're through all of the stimulus, we're getting through to the end pretty quickly. Is the U.S. economy ready to stand on its own 2 feet? Well, we might be standing on the economy on our own 2 feet at a lower level, but that's what everybody's trying to avoid. No one wants to have any pain. So we do all these things to avoid pain, to avoid a reckoning that we'll have to face one day. I really wish I had a better answer for you, but whatever we do, I don't think it should be a sudden policy change just because we have a lot of debt. If we have a sudden policy change, we'll still have a lot of debt, but we'll also have a panicked economy, and that would make things even worse. When do we pay the piper? When do we face this down? I wish I knew. That's one reason why I always worry about the stock market, because what happens when the growth of the dollars becomes the shrinkage of the amount of dollars out there. We'll see. Thank you very much for watching. Great to see all of you. I'll be back tomorrow. Today's Fed meeting was exactly textbook as we expected. Exactly. And that's where the market did so well. All right. I hope you guys didn't panic sell last week, and I hope more of you took advantage of the buys in the last few days. We'll see how long it lasts, and we'll have one more show this week tomorrow. Okay. Thank you very much. Bye.